Are you aware that Tesla and its new alliance are thought to be revolutionary? Although Tesla has hit record lows in the past year due to a number of obstacles, the leading electric vehicle company has never stopped in the name of innovation. If you're an enthusiast or investor in Tesla, you're more than likely to hear good news, and this could be it. In a news release dated January 3rd, Piedmont Lithium announced that it has modified its agreement with Tesla Inc. to supply the American automaker with spodumene concentrate SC6 from North American Lithium. Piedmont is a leading global developer of lithium resources essential to the U.S. electric vehicle EV supply chain. In addition, the aforementioned news release indicated that Piedmont and Tesla had reached a mutual agreement to modify the terms of their prior offtake agreement. The new conditions are legally enforceable for a period of 3 years with the possibility to extend for an additional 3 years. Piedmont has committed to provide Tesla with over 125 zero metric tons of C6 starting in H2 2023 and continuing through the end of 2020. The revised terms state that a formula-based method connected to the average market prices for lithium hydroxide monohydrate will set the pricing of C6 over the duration of the agreement. Piedmont Lithium president and CEO Keith Phillips expressed his satisfaction at being able to work with Tesla to supply lithium resources generated in North America, adding that the pricing obtained by Piedmont under the terms of the agreement with Tesla will be determined by market prices at the time of each shipment. The landscape of electric vehicles and essential battery materials has changed dramatically since 2020, and this agreement highlights the significance of the growing demand for lithium on the North American supply chain. It also supports the goal of the Inflation Reduction Act to support the U.S. supply chain, the clean energy economy, and global decarbonate concentrate production, which is anticipated to resume it at Nail in Hanwha 2023 and see the first commercial shipments in Q3 2023. According to Piedmont's off-take agreement with Sionna Quebec, which allows Piedmont to buy the greater of 113 zero metric tons annually or 50 OA Quebec's production of CCC, Piedmont intends to deliver C6 to Tesla from now. However, Piedmont's purchase of C6 from Sionna Quebec is subject to floor and ceiling prices for the duration of the mine. It should be recalled that Piedmont Lithium Limited also declared at the end of September 2020 that it had signed a legally binding contract with Tesla Inc. for the supply of spodumene concentrate C6 from Piedmont's North Carolina deposit to Tesla. According to the agreement, it is for a fixed price and binding purchase commitment for the first 5 years, starting from the delivery of the first product. A second 5-year term may be agreed upon by both parties. The agreement covers a fixed commitment equivalent to about 1/3 of Piedmont's planned annual CCS production of 160 zero tons for the first 5 years, plus an additional quantity to be delivered at Tesla's discretion for the first 5 years of the visaged integrated mine to hydroxide project. Piedmont anticipates that the sales of C6 will account for 10 to 20% of its entire revenue. The said agreement in September was then agreed to be amended by both Tesla and Piedmont in early January 2023. Shares of Piedmont jumped 8% in pre-market trading to 47.50 after the company announced the amended deal in order to help accelerate the transition to electric transportation. The agreement is conditional upon Tesla and Piedmont agreeing to a start date for spodumene concentrate deliveries between July 2022 and July 2023 based on the development schedules of both parties. Even though it only began producing its own batteries last year, Tesla has been more and more involved in the battery cell supply chain. For years, the automaker has secured the supply of minerals such as lithium, nickel, and cobalt for its battery cell suppliers. More recently, however, Tesla has begun to enter into offtake agreements with junior mining companies that aim to develop new mining projects that would increase the supply of some critical resources for batteries. By doing this, Tesla helps these companies raise capital to develop their projects. One of those mining businesses, Piedmont Lithium, has experienced a shift in recent years in the supply agreement between the miner and the American automobile manufacturer. Piedmont Lithium will now supply Tesla with an increased volume of 125 zero tons of CCs, a high-purity spodumene concentrate suitable for lithium-ion batteries. Previously, the lithium market was dominated by long-term contracts based on a price negotiated between seller and buyer. However, The uptrend in prices over the past few years, combined with the unpredictability of future lithium prices, has prompted a shift along the lithium value chain to a pricing mechanism based on more transparent and up-to-date supply-demand dynamics. Piedmont Lithium stated that the pricing it receives under the terms of the agreement with Tesla will be determined by market prices at the time of each shipment. It added that minerals for Tesla will now be sourced from Sayona Mining's North American lithium project in Quebec, Canada. Updated terms of agreement state that the pricing for SECCS will be determined by a formula-based mechanism linked to average market prices for lithium hydroxide monohydrate throughout the term of the agreement. It was supposed to originate from the Piedmont project in North Carolina, but it is currently awaiting pre-approval. Lithium is found in the hard rock mineral called spodumene, which is essential for making lithium-ion batteries for electric vehicle systems since 2021. The increase in spodumene prices has corresponded with the rise in downstream lithium chemical prices. The ultralight metal has entered a new bullish cycle driven by the high demand for energy storage batteries. This has led to an increase in prices for all aspects of the lithium industry, including technical grades of batteries and feedstock for spodumene concentrate, though these gains appear to have slowed recently. Since the start of December 2022, Chinese lithium prices have been declining since, along with China's EV manufacturing slowing down in November of last year. Demand for upstream lithium salts has also decreased. Participants in the market stated that Quick Market's minimum 6% Luo spot price for spodumene determined by a fortnightly price assessment, according to data from the International Energy Agency. The number of electric vehicles sold in China increased from 100,000 in 2011 to 6.6 million in 2021, accounting for 10% of all car sales. This represents a 1.67% decrease from 2 weeks earlier, but an increase of 225.98 from 2,400 to 2,600 per ton on January 6, 2022. The market for electric vehicles has seen significant growth over the last 10 years as people's drive towards sustainability. EVEF statistics show that during the first half of 2022, 4.3 million new EVs were sold, a 62% increase over 2021. When it comes to market capitalization and sales, Tesla is undoubtedly the largest electric car firm. Under Elon Musk's leadership, the business brought in a total of $57.14 billion during the first 3 quarters of 2022, $50.17 billion of which came from the company's vehicle sales. Nevertheless, due to several challenges over the last year, record low sales were achieved by Tesla. While everyone agrees that all electric vehicles are the industry's future, the media has been reporting for some time now that Tesla is no longer the world's largest producer of electric cars. However, some claim this is because Tesla began producing electric vehicles on a large scale, and for years, Tesla has been making significant investments in this area. Tesla continues to pursue an aggressive production program aiming to increase the output at existing factories in Fremont, California, and Shanghai. However, the biggest production boost is likely to come from 2 newer gigafactories, meaning giant factories in Austin and Berlin, which are believed to still be in the ramp-up phase on top of soaring deliveries. While most legacy automakers were still focusing on compliance vehicles and building just enough of them to comply with government regulations. Now that regulatory credits aren't being sold, Tesla is turning a profit. Net income increased from just $721 in 2020 to over $5.5 billion in 2021. Regulatory credits accounted for more than 1/3 of the company's profit. Only in the last few years have automakers acknowledged that electric vehicles are the way of the future and begun to heavily invest in producing them in large volumes. This has led to Tesla building a massive lead in volume production that it still maintains today, and to the seemingly endless success of the company in 2022. The company's strong results have continued in 2022, with the company highlighting record revenues, operating profit, and free cash flow in the 3rd quarter of the year. The gap between it and its rivals is even wider thanks to innovations in the EV and energy storage sectors. For more information, consider purchasing Tesla stock.